For several months now, Kenyan consumers have endured a high interest rate regime, making changes where possible to survive under punishing inflation and costly credit. Late last year, all indications were that inflation would begin to drop in the early months of 2012, and while this has come to pass with inflation declining for 4 straight months to the current 15.6%, analysts say the fundamentals for lowering CBK's benchmark lending rate are not yet in place. Last year's consistent rise in inflation saw the central bank react by raising its benchmark lending rate in what was the sharpest increase since its introduction. But now with inflation lowering, is the central bank ready to lower its lending rates?
If you actually look at the month-on-month data, inflation actually went up 1.32%. In my view, they will hold the rate.
Look at it in terms of where we are as an economy, from the perspective of the fact that we're expecting elections coming very soon, and also in terms of the liquidity position that is there, there's still a lot of money that's already in the market that we might still need to control in terms of ensuring that it does not revert to where the inflation levels that we are seeing. So definitely I would expect central bank to be a bit cautious.
Though the opinion of Zimele asset managers differs with the prediction of a slight reduction in the CBR, the general feeling from analysts at NIC Securities and Standard Investment Bank is that central bank will still be keen on maintaining its tight monetary policy to avoid sending the wrong signal to the market and taking back the economy to last year's high inflation and wide fluctuations in exchange rates.
If you look at the monetary tools they use to fight inflation, it's a double-edged sword. You're fighting inflation, yes, but then you're actually in the process stifling economic growth.
This means CBK will be hard-pressed to balance availability of credit and taming demand-driven inflation while trying to appease a parliament that is intent on capping commercial banks' interest rate spreads.
That is already sending a signals to some of these institutions that what they need to do now is to try and ensure that they are not really taking advantage of the situation.
All in all, this Wednesday's decision by the central bank will definitely leave a section of stakeholders disappointed. But question is, will it be consumers, legislators or commercial banks? Wanjiru Gaitho, Citizen Business.